There's quite a bit of action in the euro today, and that was kicked off by some Eurozone economic reports we had at the start of the London session. The euro is always a currency that's on the move, but today in particular, we had a lot of offsetting flows. Starting off with Eurozone data, we had German retail sales, which came in negative, falling for the third month in a row. We also had Eurozone producer prices fall for the third month in a row. So inflation, spending, all turning negative or remaining negative, painting a grim outlook for the Eurozone. But the euro actually soared shortly after the London Open because the ECB came out and European policymakers said that they are no rush to lower interest rates in July. Now, the market didn't necessarily anticipate a rate cut so soon, especially this month. But I think if you take a look at the economy in general and the recent rhetoric from the central bank, additional easing was definitely on the table. So that kind of ruled out a near-term move. It does not completely eliminate a summer easing by the central bank, either in the form of a rate cut or more loans, any type of additional accommodation that the ECB could unleash. So, we did see the euro pop up at the start of the London session. The rally fizzled when we had the EU come out and say they nominate IMF Director Christine Lagarde as the next head of the European Central Bank. Now, this is significant because her name was floated around, but she wasn't a serious contender. The market was really talking about and hoping for either the head of the German Bundesbank or the head of the French central bank to lead the ECB after Mario Draghi steps down. This is important because Lagarde does not have direct central bank policy making experience. And she's a politician, not an economist. So the market was a bit dismayed to find out that she was going to be the next nominee as ECB head. If the EU had opted for Bundesbank head or the head of the French central bank, they would have elected someone that would be currently on the governing council and be much more intimately familiar with some of the issues that the ECB is dealing with right now. And of course, as the head of the IMF, she is also sensitive to some of the problems in the euro area as a whole, but she never had as much of a finite focus as some of the other contenders. So the euro sold off in response as investors expressed their disappointment. But the question now is, where is it headed going forward? There's only so much longer we think the euro can truly withstand this back-to-back onslaught of softer economic data. While the ECB is not ready to move immediately on lowering interest rates, the trajectory is still going to be for more accommodation. They've been very clear about that. It's just a matter of timing. In the very near future, we have the U.S. non-farm payrolls report scheduled for release. Job growth is expected to recover significantly, according to some Fed officials like Fed President Bullard, who thinks that we'll have a nice recovery in NFPs. If we do get that recovery and we get the unemployment rate holding steady, average hourly earnings growth accelerating, that could be the catalyst that kind of renews the sell-off in the euro dollar.